The best thing you can do with your money is buy quality dividend stocks. Maybe you've given dividend stocks a try before, and you just didn't seem to catch any traction. Maybe you tried to commit to dividend stocks in the past, but you saw that stunningly beautiful Apple Incorporated or stud of a Tesla, and you said peace out to your long-term relationship with dividend stocks. It doesn't matter why you abandoned them in the past. What's important, though, is that you fully understand now the magic of investing in dividend stocks and the power, the true power, of reinvesting your dividends. Let's do it. Hey guys, before we get started, make sure to hit that subscribe button below the video to ensure you do not miss any future videos I post. Make sure to leave a comment below saying you subscribed, and I promise to respond personally to your comment. This video is based on a video created by Dividend Data a couple of months ago that did a great job of reinforcing the beauty and the true power of dividend reinvestment and the dividend snowball. Specifically, in that video, he used one dividend stock over 25 hypothetical future years. Whereas in this video, we're going to look at a 5 dividend stock portfolio, 25 historical years, 25 years that actually happened of actual price and actual dividend history, plus an additional 10 future hypothetical years. We will also look at a much more realistic monthly contribution for the average Joe of $400 a month versus $1,000 a month. Quality dividend stocks are special because of their staying power. They are not a flash in the pan. They are mature companies with stable cash flow and consistent growth. To show you just how special these companies are, I want to present you with a detailed example. Very detailed. It took a long time to create this video, so if you do appreciate it and you learned something from it, make sure to leave a like and a comment. So what happens to dividend stocks over 25 years? How about 35 years? How much do you get paid in dividends during that time? What happens if you choose to reinvest those dividends over time versus just receiving them as cash? In this real-life example, we are looking at 5 dividend stocks in my portfolio. We are making the assumption that you picked up these stocks in your portfolio in 1995 and held them through 2020 and beyond for an additional 10 years. In this model, I use the actual price history and the actual dividends paid for the period 1995 to 2020, and I made the assumption that the monthly contributions would begin at $400 a month and then be increased every year by 3%. The monthly contributions would be split equally between the 5 different dividend stocks: Walgreen Boots Alliance, WBA, Realty Income Corporation, O, First of Long Island Corporation, FLIC, UGI Corporation, UGI, and the McDonald's Corporation, MCD. Each of these companies have been paying consistent dividends every single year and increasing them for at least 25 consecutive years. Some of these companies, though, have increased their dividends for over 40 years, and each one of them represents a different sector of the economy. Let's start with what actually would have happened in real life over the past 25 years. Pulling monthly price and dividend data was time-consuming for 5 companies, but it does provide clear insight to real life, not just theory or hypotheticals. Here's what would have happened over 25 years if you had not reinvested dividends. Your total portfolio value would now be worth $494,000. Annual dividend income would be around $17,000. The total dividends paid during those 25 years would be $157,000. Now, $17,000 a year based on the most recent trailing 12 months is nothing to thumb your nose at. That's good quality dividend income, and that does not require you touching the principal. But what happens if over those same 25 years you reinvest your dividends? Meaning every time you get paid a dividend, instead of using that cash to do something else, you actually reinvest it back into the same company and buy more shares, which is something you can automate through your brokerage. Over those same 25 years, by reinvesting dividends, you now have a portfolio that's almost double at $880,000. Your annual dividend income is now almost $31,000, and the dividends paid during that time frame, $252,000. How can this be? How can the same monthly contributions and the same 5 companies and the same money going into each of those companies result in such drastically different results? It's all about dividend reinvestment. When you reinvest your dividends, you buy more shares, which means that the next time a dividend is paid, you have more shares to get more dividends. And then you take those dividends and reinvest for more shares, which means the next payment has even more dividends paid. You can see here after 25 years of reinvesting, the real performer here is Realty Income Corporation with annual dividend income of nearly $11,000. Whereas you can see that the holding value for McDonald's is significant, $247,000, and has half of the annual dividend income that Realty Income Corporation has. There truly is a lot of power in reinvesting your dividends. The great news is that the real magic hasn't even really happened yet. That happens between years 25 and 35 and beyond, even though you can see that the results are significant by reinvesting for the first 25 years. Now, there's no way to know for sure what future prices or dividends paid out will be. So to estimate what's going to happen over the next 10 years, I took an average stock price appreciation of 5% across all 5 companies, and then I looked at the actual dividend growth rates for each of these companies over the past 5 to 10 years, and then utilized a growth rate that was consistent with those numbers. By the way, you guys should know that I'm making this Excel spreadsheet available to my Patreon members over on the Patreon website. So if that's something that's interesting to you, if you'd like to have access to a monthly dividend stock spreadsheet every single month that tracks the dividend stocks out there that have been paying dividends for at least 5 consecutive years, and you want to have all that data to make informed decisions, then make sure to click on the link in the description below and you can join that Patreon community for as low as $5 every single month. You can see here on the chart here that tracks portfolio value just how big the difference is between these two different methods of reinvesting your dividends versus not reinvesting your dividends. You can see that that blue line, which tracks reinvesting dividends, really starts to take off and separate from not reinvesting right around the year 2009, whereas what appears to be negligible results in the beginning really paved the way for that change to happen. So what happens over 35 years? 25 of those years based on historical data and the extra 10 years hypothetical. Again, this is first without reinvesting dividends, which means that every time you get paid a dividend, you just keep it. You don't reinvest it. You can see here now that the portfolio after 35 years is worth $1.03 million. The annual dividend income from the portfolio, $38,998, and the dividends paid over that same 35 years, $461,000. Now, I don't know about you, but I could probably live off $39,000 a year and not even touch the principal. I wouldn't necessarily want to in retirement. I'd like to have access to more money, but I could live off of $39,000 and not even touch the principal. And you could know that your annual dividend income would grow every single year. But what happens if you reinvest your dividends? You've already seen what can happen over just 25 years. Here is where the magic really happens. Over 35 years here, adding in those 10 hypothetical years, you now have a dividend portfolio of $2.54 million. The annual dividend income from this portfolio, $96,359. I can certainly live off $96,000. And the total dividends paid during the period, $920,000. You can see during this time period, the real performers here are Realty Income Corporation and UGI. And you can see there's a big difference in the holding value. That's $725,000 versus $583,000 between the two companies, but the dividend income is about the same, $27,000 versus $26,000. McDonald's Corporation has a holding value of $612,000, but it ranks third on the annual dividend income. And even though the difference here is staggering between reinvesting and not reinvesting, it gets even better because if you were to stop reinvesting dividends here and just start living off the annual dividend income, that dividend income will still continue to grow because the underlying stocks in the portfolio will still continue to raise their dividend. Why? Because they have over the past 25 and 35 years. And you should know that quality dividend stocks that pay a dividend are hyper-focused on growing the business consistently and maintaining and growing their dividend. I want to remind you guys that you only contributed to each of these companies $64,000. Combined, for those 5 companies, you would have contributed $320,000. But you have over $2.5 million in the portfolio. And that right there is the power of dividend reinvestment. Yes, part of that is just capital appreciation. But who cares about capital appreciation? When we think about it, if we really drill it back to its core, why do we invest at all? We invest for financial freedom. We invest so we don't have to work in the future. We invest so we can follow our dreams across the world or just to stay home and play golf all day. That's why we invest, to accomplish our goals and dreams and not have to clock into a job from 9 to 5 every day. To do that, you are going to need cash flow, consistent monthly cash flow. And the best way out there that I've found to do that is not to invest in Bitcoin and not to invest all your money in Tesla and Apple, though I'm not saying those are bad companies. If you're interested in monthly cash flow that's ever increasing for the rest of your life, then you got to invest in quality dividend stocks. Make sure you guys click on that subscribe button below before you leave the video, because in the next video we're going to talk about how a portfolio like this, which has already shown tremendous results, how does this type of portfolio compare to other opportunities out there, such as, I don't know, investing in the S&P 500 or maybe a dividend stock ETF. I'll catch you guys in the next video. Have a good one.